Good morning, good afternoon, good evening, folks. How are you doing today? I have a very exciting topic today. We are going to listen or understand what Matt, the mortgage guy, is doing to add bonus content to my course, How to Get Started One Rental at a Time. Let's welcome Matt to the show. How you doing, buddy?
I'm doing good, Mike. Thanks for having me, and thanks for holding me accountable. This is the best way to make sure you get something done is tell a friend, and then have a friend tell the world, and then you'll have 20,000 or so people thinking, "Oh, Matt said he's going to have some stuff by the middle of July. Where's it at?" So, this is accountability 101 right here.
Absolutely.
And so, go ahead.
So what we're going to talk about here is Matt has graciously agreed to create Mortgage 101. We're going to go through the topics that he's going to create. It is going to be bonus material included for free inside the How to Get Started One Rental at a Time course, link below. And by the way, if you're watching this in June, like 7 more days, there is a June 50 discount because a lot of content that I was hoping for June is not going to come till July. So why not give you $50 off to buy it early, and it will come in July. So this is coming by July 15th, right, Matt?
That is the plan. Yes, sir.
Put a date.
Yeah, we've got the outline. I've got the knowledge in my head. I just have to press record, get the knowledge to come out of my mouth. And what I'm really trying to do more than anything else is give people some real actionable stuff where you go through this, understand mortgage on a higher level, where somewhere, whether it's your primary residence, whether it's an investment property, you're going to save money. You're going to come out and go in like, wow, I think Matt, the mortgage guy, just saved me $4,000. I feel pretty good. Yeah. And so,
let's just key into that again. Right now, the course is $299. You got a couple of days to get it at $250. This one bonus section alone, let alone buying rentals, getting cash flow, doing syndicate. This one thing alone is going to pay for itself 10x. It's pretty amazing. And thank you for doing this.
Yeah, no worries. I'm happy to. So you want to go through kind of the topics and
show them what they can expect. That way we could all hold you accountable.
Right. And first and foremost is finding a professional you like and trust.
Yes.
Which I think is really important because generally what people do is they wait until Saturday at 4:30 p.m. and they're walking through an open house. And that's when they find the mortgage person that they like and trust. Mm-hmm. Or at least mortgage has been explained to me. And I agree with this. Like not something that somebody wants to do. Nobody really wants a mortgage. They see granite countertops. They see a yard where their kids can play, and a mortgage is in the way of them buying this house. And so if they look at it like that, it's not like they're all excited to connect with a mortgage pro. But if you do this, I guarantee you do this beforehand, it's going to help you. And so that is going to be the first chapter. Is how you find this person, and just some tips and tricks on how you do that. And then you've probably heard this if you listen to any mortgage content anywhere. The next chapter is doing the pre-approval first.
Yep.
Because I continue to see people that just don't do this, and so it's okay. We got to continue to educate people to do this stuff first, right? Because Sunday evening. When you're trying to put an offer in Monday morning is not the time to get pre-approved. Yeah. And it's not just because you don't want to be in a fire drill situation. It's because you want to have all the knowledge of here's the price point I'm buying. Here's the monthly payment. Here's my total cash to close. Here's the costs involved. Here's the 30-year fixed rate. Am I buying points? Am I not? All that stuff, have all that knowledge beforehand. And I promise you as a buyer, you are going to feel really good.
Yeah.
You're going to be walking into open houses knowing if I offer 530, I know what that payment looks like. If I offer 550, I know what that payment looks like. Exactly. I know what my total cash to close is. I know what I have in the bank. I know what I have in reserves. Just give yourself that knowledge to where you're walking through. And in today's market, it might not always be like this, but you're generally going to have to walk through an open house and your realtor's going to say, call me in an hour. Let me know if you want to offer.
Exactly.
And so, that's going to be an important one. And, right behind that is setting goals and game planning, which piggybacks to you get pre-approved and then you put together a game plan.
Yeah.
And the importance of this, Mike, is when you walk through an open house and you and your lovely wife and your 2-year-old start dreaming, start getting emotional.
Yeah.
Emotion isn't a good place to make
No,
decisions from.
no, it's
That
not.
emotional state
It's
of
really
mind
not.
is not where you want to make decisions. So if you have a game plan, and if you've done that before and set up a little strategy session with, I promise you, if you work with a good loan officer and say, hey, can we get on a 10 or 15-minute call and talk strategy, a game plan? They're not going to turn you down. And that is just going to help you out. Whether it's an investment property and you're talking numbers and cash flow and long-term hold, short-term, all that stuff, or if it's just your primary residence, both scenarios is going to help you immensely. And behind that, I'm going to have a chapter on mortgage jargon.
Yeah, that's a big one for folks. Lots of fancy vocabulary out there that, if used, if not understood, could really confuse you.
Right. I mean, even somebody who's in mortgage and real estate, somebody on my channel the other day just threw out CRE, and I just didn't think about it in context. I'm like, what are you talking about? And they're like, commercial real estate. I'm like, oh, of course you're talking about commercial real estate, but it's all the acronyms and all the jargon.
Yeah.
We'll be able to hold your own in a mortgage conversation and know what, APR means and all that other stuff. So
very cool.
How to read a loan estimate. I know.
Oh, that's going to be awesome.
Right. I've done, and this is where people are going to, whether you're shopping for a loan on a purchase or looking at a refinance, you're going to be able to know what to look for and what every box needs. Because so often, and this is the biggest mistake people make, is, hey, I talked to so-and-so and they were 7,000. And I talked to so-and-so and they were 8,200. 7,000 is cheaper. I'm going with them. If I look at it, I go, oh, well, that's funny, because that one that you thought was cheaper has more fees in box A. Box A is the only box that lenders control. You thought it was cheaper because they shaved some numbers down on prepaid tax and insurance, where all these variables that are going to be the same, no matter who you use, it's literally what they put in the box.
Yeah.
So they put $1,700 less in the box to make it look nicer. But when true disclosures go out, when you actually get the loan, both lenders are going to collect the same amount of property taxes, same amount of homeowners insurance, the same number of days of interest.
Yep.
And if you're coming to me for a refinance quote, I can say 28 days of prepaid interest, guesstimating you're going to close on the 3rd. Or I can say 1 day of interest and hope you close on the last day of the month. That might be a $1,500 difference, and you don't know it because you don't know what box to look in.
Exactly.
And so these clarifying things, that little stuff, that's going to save somebody who does one refinance probably a couple $1,000 just knowing what to look at, because 100% commission sales mortgage folks are not all necessarily looking out for you. They're trying to sell a mortgage.
Absolutely.
And so, for somebody who buys the course and they're in Nebraska and they don't have the luxury of calling Matt the mortgage guy, they've got to deal with Nebraska mortgage brokers, this one little piece
absolutely
is likely going to save them a couple $1,000.
That's awesome.
Loan types and how does credit affect my mortgage? Those kind of tie together, because based on how much you're putting down, what your credit score is, you're likely going to be advised, hey, the FHA loan's the best loan for you, or you should do conventional, or maybe you want to look at lender paid mortgage insurance versus the monthly mortgage insurance because you got an 800 credit score and you're putting 10% down. Whatever the case may be, going through some of that stuff so people understand the reasons, because sometimes they'll reach out to a mortgage person and we try our best, but I can't necessarily spend 4 hours with every single client, like really digging in. I would guess, and I've seen it and heard it and had other people come to me like, thanks for explaining that. My last mortgage broker didn't explain that to me. But rather than just like, hey, Mike, conventional is the best deal for you, like let's go conventional, a little bit of behind on why. And why, this credit range and this down payment might go here and whatnot. So
that's awesome,
man, as I'm talking about these are some freaking good ones, man.
Yeah.
It's gonna be some good stuff.
Yeah. It's going to be awesome.
How much will I qualify for? And this one is going to be a lot more in depth and a lot more educational than typing numbers into Zillow.
Yeah.
Because people always call me and they're like, well, I type my income number and this into Zillow, and I think I can buy for 700,000. And, they're excluding taxes and insurance. There's no space in there for mortgage insurance. They're talking about what their self-employed, top line is versus bottom line. There's just a bunch of, variables that they're not necessarily taking into account. Probably don't have debts plugged in or anything like that. So this is going to give people a really good idea on how they can guesstimate on their own. Here's what I make. Here's what my current debts are. Here's what I've got to put down. Here's about what I'm going to qualify for.
That's awesome.
Versus plugging stuff online. But I think one of these days I want to have some sort of tool on my website where people can do something like that, because I think it's valuable. A lot of times all those tools are hidden behind
paywalls.
Or give me all your information, because I want to just pound on you for 10 years until you finally do business with me. I'm comfortable. I've got enough business. I can just give all that stuff away, all those tools away. And then if people decide they like and trust me, they'll come work with me.
That's awesome.
So behind that, how interest rates work. And it's another topic that I probably, could make a video a month for the rest of my life.
Yeah.
And still have people curious about, why I pay points, why I don't pay points. And I recently made a video where it's not a black and white. Yes, pay points, don't pay points. There's a bunch of different variables. And even it's cool for me. I learn as I dig into this stuff to try to explain it to people that, wow, I looked at that a few months ago and I knew instinctively that we weren't going to advise to pay points. But now that I'm looking at it, like, things are changing. Like, month to month, lenders' rate sheets might change where from one rate to the lower rate, it's a half a point. And then a month later, it's 3/4 of a point. And lenders, for whatever reason, might steer you towards something to where it might make sense for somebody in April to buy a half a point, because they're going to be able to break even on that cost up front in 3.5 years. And then it's a 6.5 year break even a month later. And investment property versus primary, everything's different. Everyone's scenario is different. I probably going to have some of my personal beliefs in there where don't spend today's dollars when it's an 8-year break even.
Totally agree.
I just don't agree with that. And then lastly, subject to adding stuff to this. This is the very least. And what I might do is, I can add some and then share those with you to add, but finding a realtor and home shopping, because as important as it is to find a lender you like and trust and get all that stuff squared away in a market that's anywhere close to as competitive as this market.
Yeah.
Really important to have a really good realtor on your side. The best realtor for you isn't necessarily the best realtor for somebody else. And so there's going to be some, ideas and some tips on how you're going to find a really good realtor for you. Besides just, somebody who knows that market that you're looking in.
Yeah, that's going to be that setup's going to be amazing. Again, we're going to save people thousands of dollars. One thing I might ask and see if you can add just as an ask is, I get asked all the time about, should I refi or not?
Okay.
Right. And I think showing the simple math about calculating a break-even period is a worthwhile discussion, because I get asked that. That's probably my most asked mortgage question. Right? Should I refi? Should I do this? Should I do that? I think showing people break evens, because for me, it's 3 years, right? If you can break even in 3 years or less, it's a no-brainer. More than that, especially with investment property, right? You might trade up, you might sell. It's just lots of other variables. So again, I'd love to see, somebody showing them the math and letting them decide.
Right. Yeah. And I think that's, generally what I do is let's look at the numbers. If it breaks even in less than 3 years, let's talk about it.
Yep.
Because then sometimes, well, you know what? I think we're probably going to sell this one in 1031 within the next couple of years. Okay. Well, in that case, don't
do it. Yeah.
Or other people that are like, I am buy and hold true and true. Like, I'm never selling this thing. Okay. It's a 32-month break even. It's a green light for sure. You want to do that, and different people have different goals and objectives and whatnot, but the 3-year break even is a good one. I've been telling people even 2-year break even.
Wow.
Because rates are so low.
That's true.
And you'd be surprised though, Mike. I show people 14-month break even, 9-month break even. They're like, well, I don't know.
Oh my goodness. 9 months, dude, sign me up for that.
Exactly. Yeah. And there's stuff within that, refi where, based on what you're trying to do, there's a bunch of different cool ways to refinance. It's not just all one way. So I'll definitely do that. I'll add, should I refi? And that'll be the title.
That'd be awesome, man. And again, folks, all of this will be done by July 15th. But Matt, just so you know, you can release them as created. I will load them in the course. It'll be a bonus section for free. And again, just this section alone is going to save people thousands of dollars. So I appreciate you. People want to follow you, get part of your world. What should they do?
Head on over to Matt the Mortgage Guy on YouTube, like, comment, subscribe, all that good stuff. If you're in California, shoot me an email at matt@mattthemortgageguy.com. If you're outside of California, I've been getting great feedback from nationwide broker partner of mine. If you go to greatmortgagebroker.com, it's a quick 6-question thing. It's got a video of me on there. And, I'm putting my reputation on the line by saying you better follow up with these people. I've gotten folks that are like, oh, somebody responded to me at 7:30 at night. Didn't expect it. Thank you so much. Even the response I get like, hey, Matt, I filled something out. I haven't heard back. I dug into a couple of those. The number might be a Philadelphia number, might be an out-of-state number, but if you filled out a form, expect a call.
There you go. Well, buddy, I appreciate you. Thank you very much for giving your time. You're doing this just out of the goodness of your heart. Thank you for being a part of my weekly series. I look forward to our conversation every week. Thank you. Thank you. Thank you.
All right. Yeah. Thanks, Mike.